Let's get across the market open. David Scutt joining us from StoneX. Scutty, welcome back. Good to see you. So let's first start with what we're seeing internationally. Obviously, those US-China trade negotiations, they're kicking it further down the road, another 90 days.
G'day, Andrew. Great to be back. And you're right, just a continuation of the can kicking that we've seen, not only in this episode of the trade negotiations, but what we saw back in Trump's first presidency as well. So no real surprise. It had been flagged days in advance. And of course, we still have that semi-optimism coming through from the US-EU trade deal at the moment. We're still working through the details, but it's pretty clear that there's not a lot of details right now, which isn't necessarily a bad thing for European markets.
Interesting to see what's going on earnings-wise out of the States with a focus on tariffs. Clearly, we are seeing some effects on some of those companies, but also those choosing not to provide any guidance are being punished.
Exactly right. And that's been a bit of a prevailing theme that we've seen. A lot of run up in these company names, a lot of strength in this market, valuations are stretched. And unless you're prepared to go and back it up with some form of at least solid guidance to go and underpin that, you get these big drawdowns coming through. Earnings season's been really interesting. It's been just an absolute wave, mostly of beats. But as you said, those that actually go and don't provide guidance or miss have been absolutely crucified. The real game starts to me tonight. We've got the two M's, Meta, Microsoft, and then of course Alphabet and Apple a day later. And that's going to really go and determine what happens, because that are the parts of the market that have led this rally higher.
Now, Scotty, of course, also looking ahead to the Fed and its decision, markets pricing in no chance of a rate cut. We'll maybe have a couple of dissenters on the board there.
Yes, that's going to be probably the biggest area of contention in the whole debate. I think everyone expects that the funds rate will go and remain at 4.25% to 4.5%. But what will happen when it comes to those dissenters? We know that Governor Waller is very likely to. Michelle Bowman might go down that path as well. The thing that I find really interesting is that that's kind of expected. And so if that happens, I don't think there's going to be a big market reaction. But if we were to get another FOMC voter come on board as well and dissent, that would really go and have that wedge in between the other committee there. And that could go and really lead to quite a dovish repricing that we've seen in markets. At the moment, we have less than 2 full cuts priced in to the US curve this year. So that's probably where the risk is, that we get a third dissenter joining in. But at this point in time, I don't expect any major changes in the statement. And Jerome Powell, he'll be playing a very, very straight bat.
What are you seeing with those US yields at the moment at Treasuries?
Yeah, some really interesting moves overnight. A really strong 7-year note auction came through. And then we've had the refunding announcements coming out. So we've got the actual borrowing requirement for the current quarter released on Monday. And that was over $1 trillion US. And despite that figure, we've seen the back end of the curve actually go and rally a little bit. Clearly, we've seen the debt negotiations, the big, beautiful bill, raise the debt ceiling by $5 trillion. And the Treasury's gone straight to the world to go and collect on that to replenish their cash reserves. Today's going to be the interesting one. We're going to get details as to exactly where that debt is going to be issued. Will we go and see Besant be game enough to go and term it out and start to go and push it out to longer durations? The market reaction, given what we saw in the 7-year note auction, given what we saw across the long end of the curve last night, clearly I think there's going to be a lot of short-term bill borrowing taking place over the next 3 months.
Now, Scuddy, locally, a key plank in the RBA's decision-making will be revealed today with the quarterly read on inflation. What are the expectations there?
Yes, markets have gone and settled on 0.7, which is interesting in itself because the RBA, when you go back to its previous forecast and the SOMP, we're looking for just a 0.6 outcome for the trim mean reading. That would go and leave the year-on-year rate at 2.7%, still further progress towards that midpoint of the 2 to 3% target. But it's interesting that markets are almost fully priced for a cut next month, despite having inflation coming in a tenth above expectations. So it would be very, very interesting for market dynamics if we were to go and get, say, a 0.75 for that trimmed mean reading, because that might go and throw a few people off, because the RBA still seem to be reluctant cutters, even though there's a division on the RBA board. It's clear that unless there's confidence that inflation is going to return to the midpoint of the target, it's not going to go and move. So that's probably one of the areas to go and look at right now, because it looks like the risks are skewed to the upside for that print.
And Scotty, let's just touch on what we're seeing in commodities, particularly iron ore. What's going on with the price at the moment?
Your guess is as good as mine. I tell you, with iron ore, I used to try and go and read the tea leaves and try and follow the fundamentals and everything else. But over the years, that's just gone out the ejector seat, mate. And looking at the technicals, a lot of what happens, at least in futures markets, can be entirely explained by what's going on in that front. And what we saw yesterday, there was a decent pullback. We saw a break of uptrend support, and then it bounced off 150 support, which is also where the 200-day moving average is. And it's just gone like a rocket straight up, and that's likely to go and help our iron ore miners today on the local bourse.